the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, and of course the sectors and companies to watch. But as always, a quick recap of some key movements. While Singapore shares inched higher earlier after data showed the country's non-oil domestic exports reversed January's contraction to grow 7.6% in February. Now, if we look at the Straits Times Index, it moved 0.57% higher to 3,857 points at about 2:20 p.m. Singapore time, with a value turnover of nearly 733 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI ended up 0.61% at 3,859 points. In terms of value turnover, we are looking at 1.27 billion Sing dollars. Gainers outnumbered losers 305 versus 200. Top advances for today, we've got here GMH USD, UOB, and New Incorporation USD. And top decliners, we've got for you Shangri-La Hong Kong dollars, SGX, and Jardine Cycle and Carriage. Now, in terms of companies to watch, we have Keppel, because Keppel said today that its wholly owned Kepland Investama is in a dispute over ownership rights for land plots in Jakarta. Now, elsewhere, from China's special action plan to boost consumption and how it is reportedly planning for global CEOs to meet with its President Xi Jinping next week. We've got more global headlines in focus, and also on deck, how U.S. retail operator of Forever 21 has filed for bankruptcy for the second time. Now, lots to watch, and joining me on the line on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, welcome.
Good evening, how are you?
What a chaotic week. A lot of things going on, a lot of changes as well. But Mr. Kuo, let's try to unpack them one by one, starting with the Singapore stock market. How did the STI fare today? Any surprises when it comes down to the companies to watch, say, Keppel?
Okay, before we touch on Keppel, if you have a look at the market today, amongst the biggest gainers today was a broad range of companies. We had some banks, we had some construction companies, we had some REITs in there, we had food and beverage. So it looks as though the market is starting to broaden out. I mean, previously when I spoke with you, it was mainly the banks, or it was either the real estate investment trust that were doing well. But at the moment, it seems to be fairly broad-based, and I think that is very healthy for the Singapore market. But going back to your question about Keppel.
Yes.
This isn't the first time, Tian Tian. This is the second time that it's happened. And it seems as though there is some an old law over in Indonesia where somebody can come out and sort of say that I think this piece of land belongs to me, and the lawyers are quite happy to jump in and say, I'll represent you, we'll go to court. Then the judge has a look at it and says, oh, do you know what? This doesn't really apply in this particular case. You don't have any right to this piece of land. And so if you have a look at Keppel today, the shares were up about 1.5%, up about 10 cents today. So I think the market is just saying that this is just a bit of noise, and let's just ignore that completely, because this will go through the courts, and as in previous cases, the judge will just throw it out.
Okay. Now let's zoom in on some of the other counters to watch, Mr. Kuo. We've got here ground handler SATS. Well, SATS signed an MOU with Vietnam Airlines to build and operate an air cargo terminal in Vietnam's new Long Tan International Airport. How significant is this for SATS if we look at investors' reactions today? I mean, shares up 0.66% at the close, I believe.
Yeah, up a bit today, but not entirely surprising. This is all part of SATS's strategy, which is to try and become a freight handler, a cargo forwarder for this particular part of Asia and for the rest of the world as well. I mean, having bought that World Freight Services. So it's not entirely surprising, and they're partnering with Vietnam Air Handlers or Vietnam Airlines. So I think this is a pretty good move as far as SATS is concerned, and it's just strengthening its position as a freight forwarder for this particular area. So good for SATS, and I think good for Vietnam and good for Southeast Asia, because even though we have these tariffs at the moment over in America, I don't think it's going to stop companies from the rest of the world trading with each other. And I think most people would just start to ignore America after a while. Yeah. And I think, that was fairly evident today in the market, Tian Tian, because it looks as though the American futures are down, but the rest of the world is saying, hey, every
Asia
time
is
Donald
green.
Trump every time Donald Trump comes out and says something, all I hear, Tian Tian, is yada, yada, yada. Yeah. And then I just turn off completely, and I just think, right, if you've got anything important to say, put it in writing, do something, and don't just talk about it. And I think everybody's taking that attitude at the moment.
I think the latest is that there'll be no exemptions on the U.S. tariffs on steel and aluminium, right? And the reciprocal tariffs in April.
I was going to put 250% on this, and I don't know how many percent on something else, and in the end, it turns out to be nothing. Yeah.
Okay, we shall see. But let's stay in Singapore, Mr. Kuo. We've got Singapore's latest NODX numbers on non-oil domestic exports. Now, NODX grew 7.6% in February, and this is a turnaround from the previous month's 2.1% decline. But that being said, analysts in a Bloomberg poll, they were expecting a median 9.7% growth. So how far were the numbers to your expectations? And if I could stretch my question a little further, what does it mean for the outlook of export-oriented SGX-listed counters?
Okay, I think the numbers were pretty close. I mean, the analysts got it wrong slightly. They were a bit too optimistic. As it turned out, the numbers came in a percentage point, maybe 2 percentage points below what analysts were expecting. So I'm not entirely surprised about that. But with regards to your second question, I think this is something that we need to be very aware of. Even though I was disparaging what Donald Trump says about tariffs and all that, I think it will have an impact on certain companies. And really what needs to happen now is that these companies, these exporters, will need to look for new markets, because ultimately Singapore does have tariffs on certain American goods, and Donald Trump takes a dim view of any country that has tariffs larger than what it levies on those countries exporting into America. So Singapore is not entirely out of America's crosshairs, but because Singapore is such a small country, it might be ignored for a while. But ultimately, I think the exporters need to be very aware that something could happen, and they need to prepare for themselves when it does happen, and what are they going to do about it. They need to look for new markets, and they certainly need to look further east, maybe to China, to Japan, Korea, those kind of countries, Tian Tian.
Now, let's set our sights on China, as you mentioned earlier. Well, China's State Council yesterday unveiled what it called a special action plan to boost domestic consumption, and that features measures including increasing residents' income, establishing a childcare subsidy scheme. So back to the usual question that we've been asking for so many months, I think years on end already. How effective can these measures be? How can officials tackle the root of the problem, the property market, the consumption? And for equity markets, how much of a boost can it be, though?
Well, have you ever seen the movie Jerry Maguire, Tian Tian?
No.
No. I suggest you watch that movie, because there is a famous line in that movie by Tom Cruise. Actually, it was said by Cuba Gooding Jr. He said, "Show me the money," right? And I think this is what we need to see now. Show me the money. It's all very well talking about trying to boost domestic consumption, but show me the money. Show me how much money you're going to be putting behind your strategy. And if you show me the money, then we might be able to sort of see where this is going to lead us. But at the moment, there's a lot of talk about childcare. There's a lot of talk about trying to boost consumption, boosting household spending. But the nub of the problem is the housing market, and the housing market is still in the doldrums. I think property prices are still continuing to fall at the moment, and that is not very healthy. So it needs to somehow draw a line under the housing market. How it's going to do that? Lots of money. So, Tian Tian, show me the money.
Yeah, you were talking about home prices. I mean, new home prices, one of the reports that came in, it fell 4.8% in February on the year versus a 5% drop the previous month. So the problem still there as it seems. But if you're just tuning in, when I'm in conversation with David Kuo, co-founder of The Smart Investor, well, Mr. Kuo, let's stay in China, because sources familiar with the matter say global CEOs, including Qualcomm's Cristiano Amon, Saudi Aramco's Amin Nasser, they will travel to Beijing for an annual gathering of top executives, and that's with some expected to meet top leaders such as President Xi Jinping himself. Now, how far is this a move to signal that China is open for business, and how far can this increase confidence for equity investors, or is it still all about the money?
Well, I think what we need to do is, this is a beauty parade, and this is CEOs being paraded over in China saying that they want to do business with China. But when it really comes down to it, how many of these companies are going to be investing in China? And what are the conditions for them to invest in China? We've seen many companies put money into China only to find that after a period of time, they're not making any money. They seem to be handing over some of their intellectual property to Chinese companies, and then they leave China empty-handed. So I think, yes, it's great that China wants to open up, and it's great that Qualcomm CEO is going to go over there. Maybe he will meet Xi Jinping, but is he going to be taking his business into China, or does he just simply want to sell his chips into China? If it's the latter, then I think, that's a great thing. But we have to wait to see what happens, because China has dug itself into a hole, and it's got to get that trust back. And this is one big step in the direction of getting the trust of businesses back into China again.
But again, is it enough? Boils down to the numbers, boils down to the actual actions, correct?
Yeah, absolutely correct, Tian Tian. Yeah.
Okay. Now, further away, Mr. Kuo, do you want to be forever 21?
I've gone past that. I've gone past that stage. Unless you have some kind of magic formula, some magic elixir that will allow me to dial the time back to when I was 21, I don't think it's ever going to happen.
Yeah, but you know what, Mr. Kuo, even Forever 21 can't remain forever popular among its consumers, it seems, because the U.S. retail operator of Forever 21 has filed for bankruptcy after years of poor performance. Now, how would you read into the firm filing bankruptcy, not for the first time, but the second time? And also, does this reveal any deeper concerns about the U.S. economy and U.S. consumption?
I think it goes something a bit deeper than that, Tian Tian. I don't think we're actually talking specifically about Forever 21. I think anybody that invests in clothing retailers need to be very aware. I was once speaking with a clothing retailer in the UK many, many years ago, and I said, even at that time, there were lots of clothing retailers that would go bust. And I said, what is the nub of the problem? And what it said was, it's changing consumer taste. So you open a shop, Tian Tian, and you want to sell clothing, right? It's a very simple business model. You buy in clothes, you sell it, you make a profit, and then with the cash that you receive, you go and buy more clothes, and you keep on doing that. Yeah. And then eventually you say to the manufacturer, okay, I won't buy just a few dresses from you. I'll buy 1,000 dresses from you because business is so good. The problem then is that if you don't sell all of your stock, you are then left with dead stock that you can't sell. That goes into your inventory, and it sits there as stock. It sits there as money tied up, which you can't use. And so that starts to build up over time until eventually you have a warehouse full of stuff that nobody actually wants, but it's still inventory and it's still assets that your company is holding, but you don't have any cash to buy more clothes. And I think this is kind of what happens to a lot of fashion brands. Unless they follow something like the Zara model, Inditex's model, where they only have a limited amount of stuff that comes in. If you buy too much stuff and you can't sell it, you are done for, because you cannot shift that stock, and eventually it will just drag you down. And I think in the case of Forever 21, it's been around for about, 40 years or so? So it's been around for quite a long time. And they tried to revive it once, and I don't think it's going to be able to revive it again. So it's not the first retailer that's gone bust. There'll be many more, Jen.
And finally, before I let you go, Mr. Kuo, all eyes are on the U.S. Fed's latest monetary policy meeting this week. Earnings also due from a couple of notable names, including Nike, Micron, Xiaomi, Tencent, and FedEx. The usual question, Mr. Kuo, so many things going on at the same time. How would you prioritize what to watch?
I would certainly look at FedEx, because I think FedEx is a barometer of the American economy. It ships a lot of packages around the place. And if FedEx comes out and sort of says that there is a slowdown in the moving of packages, then I think it doesn't augur well for the American economy. It means that there is a slowdown coming. And then it puts a lot of pressure then on the Federal Reserve. What is it going to do? Is it going to cut interest rates in order to try and revive the economy? Or does it think that the economy is okay for now and it doesn't have to do anything immediately? Or does it even think about is there a need to increase interest rates because it is so concerned about inflation? So, yeah, watch FedEx very closely and also watch Nike as well, simply because I own shares in Nike. And so I have a vested interest. And I do hope that Nike can turn itself around.
Okay, lots to watch as always. Thanks so much, Mr. Kuo, for the insights. That was David Kuo, co-founder of The Smart Investor.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.